Greetings and a warm welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor at wealthmanagement.com's RPA Omnichannel and CEO at TROW, TPSU, and 401k TV. I review all of this week's stories and select the most important and interesting ones, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. First story. In a shocking and surprising move, Great Gray announced the acquisition of RPAG, a leading 401k practice management platform. According to a company statement, RPAG will continue to operate under its brand and leadership. Separately, RPAG canceled their national conference held in September at the Ritz in Laguna for the past 30 years, as well as other regional events. Read my recent wealthmanagement.com column that broke the news. And what's next for Great Gray, RPAG, as well as FlexPath, all owned by private equity firm Madison Dearborn, which sold NFP to Aon last year. Next story. Employees at Swiss Re with over 4,000 participants and $1.45 billion filed a lawsuit in the Southern District of New York against the plan and their record keeper, alleging excessive record keeper fees. They also allege that Empower, their record keeper, made improper rollover recommendations, unlawfully using participant data to cross-sell. Specifically, the complaint alleges that Empower improperly appropriated participant data to market its own Roth IRA while concealing conflicts of interest, which they claimed to be a fiduciary breach. TIA had been fined by the SEC in the state of New York for promoting their own proprietary investments by their in-house advisors without revealing potential conflicts, and is facing lawsuits on similar issues. As the push to serve participants and sell proprietary products heats up for providers like Empower and TIA, as record keeper fees decline, lawsuits like the Swiss Re case are bound to increase, especially against deep pocket providers, which could also affect what plan sponsors must do to protect participants. Next story, 2 cyber breaches were recently reported. First, by TPA, the pension specialist, which revealed that data of over 71,000 participants may have been breached. Separately, Inspire self-reported that one of their call center reps accessed sensitive data of 2,300 clients, including Social Security numbers. As hackers continue to target DC plans with over $11 trillion, recent hacks indicate that third-party vendors, not the record keepers, are more likely targets, as they do not have the same level of cyber protection. All of which will make plans and providers more careful about which vendors and third parties, including advisors, have access to data, and if they do, what cyber protections they have, which could result in further consolidation throughout the industry, including TPAs. Next story, noting that robo-advisor revolution never really happened. Nevertheless, Morningstar has rated top firms. Though only a fraction of the targeted $36.8 trillion of U.S. retail market use robos, which are somewhere between wealth management and do-it-yourself trading, they are used by digital-savvy investors and can amplify live advisors to do simple tasks like diversification and tax harvesting. The top 5 firms which received above average ratings include Vanguard, Fidelity, Betterment, Schwab, and Wealthfront. Can robo-advisors, in combination with AI and live reps, bring advice to scale to the masses at DC plans? Maybe, but first we need more engagement. Final story, LPL announced the hiring of Michael Dozier as Senior Vice President of their Retirement Partners Group, reporting to Cherie Belsky, Head of Investment Management. Belsky, who joined LPL last year, and Dozier worked together at T. Rowe Price. As one of the leading independent broker-dealers with top RPAs in their ranks, including GRP Financial and Hub, it's refreshing to see LPL step up and hire a true industry professional like Dozier. Before T. Rowe Price, Dozier had been a senior retirement strategist at Franklin Templeton with stops at MassMutual and Fidelity. Not only will LPL and their reps benefit, but the entire broker-dealer community will as well, as they turn their focus to the convergence of wealth and retirement at the workplace. Great hire. And last but not least, last week's LinkedIn poll asked, with the Major League Baseball training, spring training starting, who is most likely to win the 2025 World Series? The Dodgers led the individual teams, followed by the Mets and the Yankees, with any of the other teams the top choice. Go Yankees. So those were the most important stories from the past week. I listed a few others I thought were worth reading, covering Fidelity releases its inaugural Workplace Outlook report. Edelman accuses rival of helping an advisor take client information. Synthetic ETFs try to mirror private equity investments. And pending POTUS Cornell case could affect the future of ERISA litigation. Please let me know if I missed anything or if you'd like to comment. Otherwise, I look forward to speaking to you next week on 401k Real Talk.